What do I read into commodity prices? So first of all, it's a trade story, it's a dollar story, it's a Fed story. Do you worry about world growth?
There's all the topics that we think about the whole time. So I think the way to think about this year for commodities has been we started very strong. There was this kind of consensual view around synchronous economic growth. And then as the anxiety around trade heightened as the year has gone on, we saw this significant sell-off. And in particular, the summer, from kind of June through to September, we saw a material fall in commodity prices. We saw a material fall in commodity equity prices as well. Since then, we've actually seen, despite the kind of trade uncertainty hanging around, we've seen a very powerful rally. And we've seen most commodity prices lift and really responding to individual supply and demand characteristics, which is the true determinant of price through time, rather than the kind of news headlines around trade. Obviously, we've seen an agreement reached with Mexico. We've seen, obviously, progress made with Canada. People are now speculating what is next. Where could we get to with China over the next kind of 12 months? And I think next week is going to be absolutely key with regards to the LME week period. All of the traders, commodity players in London to discuss how tight markets are. And you're seeing the tightness reflected in premiums for immediate delivery, which is really powerful right now.
Evy, what am I looking for? So I have questions on coal, I have questions on aluminium, I have questions, of course, on copper. What exactly are you looking for right now? Is there anything that looks underpriced? I know we focus a lot of aluminium after the closure of the biggest refinery in Brazil. How is that going to go? Yeah, so
we're each commodity obviously responds to its own supply and demand dynamics. You mentioned aluminium, obviously the news just recently about the alumina refinery. That has tightened up the seaborne trade of alumina, and we've seen prices at very elevated levels for the last few months because there's been the prospect of it closing, and now we've got the reality of it being announced that it will be closed. So that might end up playing through into higher metal prices. We've seen the metal price respond a small amount today or in the last few days, but at the moment we haven't seen it play out yet for that. In copper, we've got lots of uncertainty around some of the next phase of copper investment. The market is looking at this quite substantial deficit. All of the big companies are talking about it. The underinvestment into new supply, which has been a great change in the industry to improve returns for investors and for all stakeholders, is building up to this very strong case over the next few years. And to me, the interesting dynamic we've seen this year has been the liquidation of all of the net length and the speculative positioning across the commodity space. And we've now got a consensual view of kind of net speculative short positions in gold, in copper, and so on, just as the market's starting to be tight and we're going into seasonally the strongest part of the year, which is Q4.
Evy, this is right where I wanted to go, which is to the elasticities of investment in creating new mines. It sounds like you and I are having a conversation from 40 years ago. Where did that go, and can we get it back? Mary Poppins, The End of the Desk, Dick Van Dyke, railways to India, When does mining get the romance back to go out and build something?
Well, I think we've got to do two or three things. First of all, we've got to rebuild investor confidence because the investment decisions that were made during the last cycle resulted in a huge amount of value that was destroyed. We've been through a kind of 2-3 year healing period, and now we need investor confidence to support the next phase of investment over the coming years. Right now, though, the market just doesn't need that material. But I think the investment decisions will be made over the next kind of 5 years, but they have to be made in the context of the market being able to absorb the supply.
Evy, to acclaimed Bloomberg reporting on labor conditions in mines, within the calculus of investment, has the labor model changed, or is a labor model of a copper mine, wherever it is, the same as it was 30 years ago?
That's a really interesting point, Tom. So we've been looking at this over the last few years, and actually, if you think about the level of labor intensity for a unit of new production, it has declined. Obviously, you've got higher levels of automation, you've got remote trucks now operating in many of the bigger mines around the world. So often in the past, we've been concerned around inflation rates in labor detracting from profitability of margins for the companies. It doesn't appear that relationship is as strong today as it once was because of the reduced level of labor component.
Evy, let me bring you over to my chart. I like this chart. It's a kind of copper momentum chart. Do copper bulls have to wait a few years before the global market flips to meaningful deficits?
Yeah, this is a chart actually that we use in a similar chart that we use with regards to the kind of pricing moves. You can see the kind of longer term copper price chart where we've had this kind of rebasing of prices from the lows of 2015, and we've kind of stepped up gradually into different bands. You know, we're now back to the level that most people tend to use as long-term pricing, around $3 a pound. We're trading just under that today. We've been above it for most of the earlier part of the year. So we're at that kind of level where people are thinking, well, you know, these projects do make sense, but we need to see confidence around the capital side of the equation. We need to see confidence around the environmental side. Water is a big issue. Power is a big issue. So all of these things need to be taken into consideration. And the permitting delays that are now kind of commonplace across the industry, it just takes so long to get something into production. And I think the market is not pricing that in today's metal prices on the screens.